Bring that ass back like a boom, 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 boom.
Hey everyone, this is Supernova here with Boom Traders Weekly Overview for week 46, November 21st, and let's get it going. First, we have a disclaimer basically saying that financial products involve substantial risk of loss and are not suitable for everyone. The past results are not indicative of future performance, and the information found in this video does not constitute any advice to or solicitation to buy or short sell financial instrument. The video is for educational and information purposes only. This is our session overview. Just as usual, we have models, market, price action, internals, notes, sentiment, seasonality, and then we do a summary at the end. The overall market model, starting with that, is on sell caution. And every time you have it, you see it on sell caution or buy caution, it's been rotating between the two. That means that the market cannot find its space and it's just better to sit in cash. So if we have to combine those two models, I'll just put it in cash. Breakouts model not working. You have very strong stocks like FSOR and Enphase, which are solid group, squatting on you. You had CELH squatting. You had other strong stocks. Even Google tried to break the 100 mark, although you cannot argue that Google is a strong stock right now. But also squatting, you had some sell out in energy stocks. You also having breakouts in biotechs, not working exactly to the point right now. So just a breakout model is not working for us. In terms of long, mid, and short term, we have negative on the low term. Mid term is neutral for now, and short term from positive turned neutral with the action we had the last few days. It might very well go to negative today. We'll see how the market reacts. Right now it's gapping down a little bit pre-market, but we'll see how it ends. So as far as market price action, let's take you to the charts and see what the markets are doing. Heading to Thinkorswim, my three in this layout. So this is the S&P 500. A couple of things I want to talk about here. So first, we have this trend line that has been acting as resistance 3 times already. We couldn't get there, but it is important to know where we stopped on this Tuesday. We gapped up, as you can see right here. We gapped up and we almost touched resistance right here around 403, which was this gap right here. So you see this gap down, it's a huge gap down. There's void right here in this resistance line. We almost got it there on Tuesday, and then we got rejected. What is important to note also here is that this is on Thursday. We stopped right here on this gap. You see there's like a gap again right here. So it's a gap up, rejected, open here, close right here. So this is a zone of resistance, and we stopped that at this zone right here, which also coincides with our magnet at 390, and that happened on Thursday. Then what happens on Friday is also important to know. What happens on Friday, you can see we gap here, but we are unable to go to this close, and this close was followed by another gap. So these gaps are important. I know that many people don't pay attention to them, but these gaps show where there's potential support and resistance. So this is unfilled gap. You see this high could not get to the close to fill the gap. So there is a gap here. This is resistance right here. So we gap right here at the high of this bar, and we are rejected immediately. So this is very valid resistance right here around 397, 398 zone. I can probably just put a label right here. So 398.47, that's resistance right here. And we got rejected to the downside. We ended here. We did close the gap and pushed up. But for me, the important zone is this one right here. So if we can break through 398.47 and probably go higher, try to go to this zone, which let's do the same exercise. See 403.1. If we can get to here, then the next obvious zone will be this trend line, which also coincides with this high. I think almost perfect. Yeah, it's almost perfect. So right this zone, if we can get through. If we can't, I'm looking for 390 as immediate support, and then of course you have the low of this bar, which is also a flip of the zone. So right here, this was resistance. We gapped over it, fell to it. So we opened right here, fell to the zone. You see right here, it's almost the same line. Fell to the zone and then blasted higher. So this is the other area, and of course the 21 simple moving average. Have the 21 simple moving average coming right here. So this is what I have for the S&P 500. We either go 398 or we pass to 390. So this is the range that I'm looking for to play today and see how it develops. Now for QQQ, there are a little bit more lines right here, but what is important to note, there is this huge gap up. So it gaps up right here. You can see it gaps up right here, goes higher, rejected, and goes lower. So we close that end at the lowest zone. So the high here would be resistance, and what happened on Tuesday, we almost hit it and we fall back. This also happens to be our magnet at 291, and coming into late last week, you can see we gapped up, and at the top we were immediately rejected. This was a filled gap right here on Tuesday and Wednesday. It's not the same action as on the SPY. We got immediate rejection. We moved lower, and we closed right at the close of the previous day. But we also have support right here. You can see this cyan line. This is also a flip zone right here from the low of this bar. So this serves as support right here. And you can see we were able to push through it on Thursday. We opened lower, but we closed higher in this zone. So this is the immediate zone that I'm watching for some support. If we can get support there, that's 283.42. If we can get support there, that'll be great. If not, well, obviously I'm looking for this zone right here to act as some support, this flip zone. Let's just put the marker 272.85. This one right here, and also an important level would be the 50 and the 20-day moving average coming right here about 277. You see that's another important zone to watch for QQQ. And last but not least, let's take it to IWM. You can see what happened right here on Tuesday. Absolutely perfect projection. This is from the channel up. So we have a channel up. We have resistance from the prior highest point right here before the gap down, and we also have this resistance trend line coming on top. Right from the high to 35.74. So it was a zone that was rejected, and it's a little bit of a mess right now. You know, gaps here. It's just a lot of gap action. But so far, this lower line here, the channel has been acting as support. So I'm either looking for some test of this zone right here, which is 186.64. Or I'm looking for some support right here with this low at 180 today. See where it plays. Right now you can see pre-market is 182. So this is what I have for the indices. Now let's turn our attention to the market internals, and again heading to Thinkorswim for that. Obviously we start with comparison between S&P and Nasdaq Composite, with the SPX in this case being on top, this purple line. We've been talking about the fact that usually when SPX is outperforming Nasdaq, then the market is not acting really well for growth stocks and the stocks that we try to navigate into. So we'd like to see the white line coming on top of the purple line, but that's not the case for now. As far as the oscillators, they're pretty range bound right now. You can see my two oscillators on the advanced decline. Issues and volume are in the midsections. The Zweig breadth thrust is also midsection with 51, and the McClellan oscillator is also within the bound. So really nothing going on. I mean, it's just back and forth, as I mentioned. there's really no sense of direction right here, so it's very easy to get chopped up in this market conditions. As far as some more indication of what's going on, you can see the put call ratio is dropping a little bit. We had like a slight elevation, but this is the 5-day moving average. You can see 0.89. This is just mid-range, nothing impressive. VIX is trying to get to the midline. You know, I use the Bollinger Bands for the VIX to basically gauge where it's at in its current range, and right now we have it right in the middle between the lower and the middle range, so I'm looking for a move to the middle range, which will also coincide with the, you know, SPX, SPY, QQQ going to the mid-range of the Bollinger Band as well. They're now higher here. Up down issues and advanced decline issues and the volume. I mean, it's just nothing really impressive happening. You can see with pretty much an equal amount of spikes above and below the midlines, you can see that there's really no sense of direction in the market whatsoever. But if you look right here on the right side, the amount of stocks above their 50-day moving average on the S&P 500, I told you that this is an extremely overbought level. If you look back in time, you can see that this is 2019, so 3-4 years back. I don't know if I can pull even more. Let's see if this will be visible. And we extend to the left, right? You can see that this 80% or so zone has been acting like an extreme overbought. Now there are some situations right here with 94, 95, but they've been like there's been like, what is that? Like 1, 2, 3, 4, 5 issues in the last 10 years. So right here you can say that we are pretty overbought in the case of this indication, at least for the stocks that are above their 50-day moving average, and we are actually heading up to 82. And you cannot really feel it in the market. I mean, the market doesn't look as strong as that. I mean, other times when we had this situation, the indices were a lot higher in their price. So I'd say be careful right here. Although we've put like the midterm and the short-term market on neutral, my personal feeling is that the market is trying to head lower right now. I'm not saying that it will, I might be wrong, but this is what the way I look at the market is telling me. The market is not strong right now, and when we get to the notes, I'll talk a little bit more about that. But this is another indication. Stocks in the S&P 500 above their 200-day moving average. Right now we are at 54, and you can see if let me just put more data in here. We're right in the midsection. So you see we had a lot of occurrences where this was above the 50%, and there are a lot of occurrences this was below the 50%, with the COVID low at 0.03, which is staggering. We also had some occasions below 10%. Right here this year in September, and also we had it right here, you can also see in June. So right now, as far as this year is concerned, which is this range, as far as this year is concerned, this is like, I think like the fourth highest reading for this indicator. So not too bad according to this indicator, but as far as price action is concerned, I don't think we're doing that good. So let me take you to the other one, which is the notes. Yeah, I only have this one for you this week. We spoke about the FTX saga last week. It is still dragging on. There's a lot of developments. There are other people talking that more exchanges are about to fall. But until it happens, it's just, plain talk. No point wasting our time with this. The most important part when we are trading, looking for breakouts and the setups that we are trading are the stocks. Sometimes I understand that, the indices might be running or the indices might be dropping, but the stocks will just do nothing. And in cases like that, there's really nothing that you can do. I understand that there's this sense of, FOMO, if you will, that, the indices are going and I'm going to miss making money and stuff like that. Yes, but if you are trading the indices, that's fine. Just trade the indices and make money while they're moving. But if you're trading stocks like we do, even if the indices are moving, if your setups are not, there's nothing that you can do. Don't fall into this trap of, chasing stocks just because they move, and the next thing that that they squat on you, or the breakouts will fail either at the pivot or at the base, which is worse, or they're just no follow through. They'll break out today and tomorrow they'll just reverse and erase the entire gain that you had, and you'll be stopped out for a loss. So observe what the indices are doing. That's fine. There's nothing wrong with it. And you saw me talking about the indices, but know your stocks. Know the stocks that you're trading. How are they behaving? And I can tell you, like 99% of the time, the stocks, even if you don't look at the indices, the stocks will give you a sense, it will give you a feeling of how healthy the market is. There's really nothing wrong with just observing the stocks. They'll tell you more than you need to know, and there will be no need to read, very lengthy presentations or newsletters about the market and where it will go, and will it go there, will it fall, will it explode. There's really no need to. Just monitor the way that your stocks are acting, and you'll understand more about the market than most of those gurus will tell you. Now, one reminder from last week, the great markets, the markets running rampantly wild towards new highs is not what the Feds do want right now. They want to tame the whole thing for just a little while so that inflation can come down, and just make sure you understand that Fed is the most powerful entity that can move markets. So we better be aware of their intentions, and understand how their policy affects the market. And right now, the things that they're doing and the things that they're saying are not supportive of higher markets. Just understand that. Same is also concerned for crypto. Just so you're on the same page. As far as sentiment is concerned, I have right here for the CNN Fear and Greed Index, and also for the Bitcoin Fear and Greed Index, I have a little notion here. It's minus 2 points from last week. So right now we're at 62. You can also see it right here with CNN. They posted right here. It's 64 last week. We're still on greed. However, with Bitcoin and crypto in general, we are minus 1 from last week. And with the things that are happening in crypto world right now, especially the FTX collapse, I'm actually surprised it's just 1 point. But, it is what it is. Seasonality, switched it up a little bit. Just wanted to show you NASDAQ. This is the second for the last 20 years, at least. November is the second strongest month for NASDAQ in general. This is just a perspective. I'm not saying, go out and buy stuff right now. This is just a perspective, so you know what's happening for NASDAQ. And as far as the S&P 500 is concerned, November again is on equal par with April last 20 years. So these April and November are the two strongest months for S&P 500 for the past 20 years. Last but not least, a summary, model and sell caution. I told you between buy caution and sell caution, there's almost no difference. I mean, it's just cash is king right now. As I said, be careful right here. Setups neutral to failing, market is neutral to failing, put volume is neutral at 0.89. Volatility is increasing. I told you VIX is trying to spike to the midline. And as far as some regards in the market, recession, Fed hikes, I'm almost at the point where I'll just say, the usual stuff, the war between Russia and Ukraine, recession, Fed hikes, the usual stuff, right? So just be careful out there. There's really no sense of direction, and the market's in a choppy condition. And if you are not careful and you're not fast, you might just as well stay out of the markets for now, and check back next week, so to speak. So if you liked what you saw in this presentation, please come and join our Boom Discord server. Like this video, post it, share it, comments. It really helps with the YouTube algorithms. And I'll see you either in chat or I'll see you here next week for another weekly overview of the markets. Until then, take care, stay safe, and see you soon. Bye bye.